Welcome to the Business After Hours, where the ties loosen, the suit relax, and we talk business without the boardroom. Grab your favorite drink, kick back, and let's dive into the world of business after hours.
Well. Welcome everybody to the Business After Hours podcast here with Jared and Scott. How are you gentlemen doing today?
Great, Jeff. How are you?
I'm perfect.
It's almost the end of the month.
We are
Can't
at
believe
month
it.
end.
Going by so fast.
I know it's October already almost.
Yeah, almost a fourth quarter.
Right.
This is crazy how quickly it goes by.
Yeah.
Scott, tell us a little bit about yourself.
Okay, great. Well, first of all, thanks for having me.
Absolutely.
Glad to be able to visit with you. You know how millennial entrepreneurs often feel frustrated because from their viewpoint, the economy is controlled by these big heartless corporations, government bureaucrats that don't have their best interests in mind. What I do is I help them to achieve financial clarity and peace of mind by becoming their own bank and legally reducing their tax burden by as much as 90%.
Wow.
Yeah, I am based in Kansas City, Kansas. I've been in the insurance and financial world for well over 30 years. I've been on my own for about 6 or 7. So I learned everything from the inside, being a 9-to-5 employee, punching the clock for insurance companies. And then later on, struck out on my own.
I gotcha. What now just to touch on the failure part of things, what caused you to close?
Well, I flamed out pretty brilliantly, to be honest with you. What happened was over the course of many years of being locked in a really bad marriage, I began self-medicating, became an alcoholic. And one day after I returned from lunch with sneaking a bottle of vodka in with me back into the office, drank it there, and was discovered and terminated. So I had been through bankruptcy. I was about to go on food stamps. I had now spousal support to pay by this point, and now no job. So it was obviously very traumatic, and I was obviously pretty unemployable. But what happened, that was on a Friday. The following Tuesday, I wrote out my suicide letter. That was it. I figured that my life insurance policy made me worth more dead than alive to my daughter, then 14 years old. And so I wrote the letter. I made very specific plans that night at 7:30. That was going to be it. A number of things happened there that showed me that God was stepping in saying, don't do that. So I'm like, okay, so what am I going to do? And as it turned out, that date that was going to be my suicide date instead became my sobriety date. Haven't touched a drop since.
Congrats.
Thank you. Yeah, almost 9 years now, November 3rd, 2015. So now I got to figure out what to do. I helped a friend in his insurance business. He knew I had industry experience, and I was only there for like 10 months or so. It wasn't a great gig, but it was something. And after that, I saw an opportunity to get into the sales side, which I had for a long time been resistant to. The mental picture I had was that the insurance sales guys were the arm twisters, the obnoxious,
Right.
sell at all costs, sell their grandmother if that's what it took. And I didn't want to be that. So I made the determination I was not going to be that. I was going to help people. I was going to use my industry knowledge and experience to help people, is how I got into that. And I've been at the insurance game on my own ever since then.
Congrats. That's awesome. So now, obviously you do insurance. So, but you have a goal of helping millennials with their finances, correct?
I do it very differently. Yes,
Okay.
yes, exactly. My goal is to help millennials. They're a very underserved and under-respected group. Many look down at them, saying basically, well, I don't know why things seem to be so hard for them. I don't see why they can't buy a house. I bought a house when I was their age. The game has changed since then.
Yeah.
Finances are completely different. 50 years, more or less ago, if you had a full-time job of any kind, it could have been clerical, retail, whatever, you could afford to buy a house and raise a family. Now, there's no way. There's no way you can afford that unless you are making good money.
Right.
And so many look down on them because they aren't doing the same things they did when they were that age. Well, those same things don't work anymore.
Right.
And what I do is, yes, I'm in the insurance world, but what I do is I help people primarily to get out of debt and take that next step forward. I use financial services products to move people forward. So many people don't realize that that insurance products do much more than just pay you after you die. Who wants to only get paid, only get the benefit of something after they die?
Right.
There are many things, many ways that they can leverage financial products to eliminate debt. I do other things that are outside the insurance realm. I mentioned helping people to legally reduce their tax burden. Those are things that I've taken from the accounting world. I help people with getting student loan forgiveness now without waiting on the government. The laws that they need in order to have student loan forgiveness are in place now. They don't have to wait for Congress to come up with something, for the Supreme Court to agree with the president. They don't have to wait on an election. It doesn't matter who's in office. All that they need is already on the books.
Right.
There are so many things that people don't realize that are already there, and I help them to take advantage of those, leverage those, so that they can get out of that little hole that they're in and can grow.
What's a common mistake that the millennials make when it comes to money?
Most common mistake that I see is in thinking that they will grow to prosperity by shrinking down in restrictive budgeting. The conventional wisdom out there is that the way to get out of debt is to shrink your money, to shrink yourself, your value. And it's self-defeating and it's unsustainable. It's a financial fad diet. I remember a lady that I used to work with. She lost, I think it was 17 pounds in a few weeks going on this diet where she ate cabbage soup. It was kind of the fad back then. And she lost 17 pounds in 3 weeks. She would go on and on. Oh, I've got so much more energy. I feel so much better. This is awesome. And after 3 weeks of that, she couldn't touch the cabbage soup anymore. And she ended up gaining it all back in just a month or two. And then some, I believe.
Right.
That's how fad diets work. That's how financial fad diets work. When you are focused on restriction, restriction, restriction all the time, it might work for a little while on the short term, but in time, you can't sustain that. And it ends up becoming self-defeating. And you have all these people that try, whether it's Dave Ramsey, Susie Orman, whoever, whatever, to find a new way to budget. The answer isn't to shrink down your value. The answer is to expand what you have, what you put out into the world, the value that you put out into the world. As you expand that, as you expand your means, so, some people hear that expression, to live beneath your means. In my mind, that doesn't mean strict budgeting. That means expand your means. What are you going to do to grow, to expand, rather than restrict yourself? So that kind of a first step is a mindset thing that people need to change. Many millennials are caught in that. Many of all age groups are caught in that because that's really all we're taught. That's the traditional wisdom, the conventional way that we hear people should use to get out of debt. But is the situation getting better or worse? It's getting worse. If the majority of people are doing this and this doesn't work, then stop doing this and look for what works. And that's why I base what I do on reverse engineering what works for the wealthy, so that we aren't just guessing anymore. We aren't just listening to our broke friends anymore. We aren't just listening to the financial entertainers anymore, but we're following a path that's already been blazed, and we know where it leads. And they say success leaves clues, or you could say it leaves breadcrumbs, and we can follow that trail to do what the wealthy do.
That's good. And what insurance products are out there that usually folks don't know about that can help them with debt and whatnot?
There's a particular structure of a permanent life insurance policy that grows cash value even after you borrow money out of that account. Okay? It's kind of like real estate. Okay, if you own your home, you get your tax appraisal from the county every year, and it says you're going to be taxed based on the value of your home, which is X, this amount. And it generally always appreciates. Now, what the county does not do, they do not ask you, do you own that home free and clear? Do you have a mortgage on it? Do you even have a second mortgage on it? Why? It doesn't matter. That does not affect the value of the property.
Correct.
A properly structured permanent life insurance policy will do the same thing. You've built up your equity. You can leverage it by borrowing money out of it and invest, pay off debt, whatever the case may be, grow your business. But that equity continues to appreciate just like your real estate does. Even the amount that you borrowed out of it doesn't affect the value of it. Okay? Because you didn't actually borrow the money out of it, you borrowed it from the insurance company. Your money there was untouched. It continues to grow just the same. So that's the primary tool, because what often happens, people focus on getting out of debt. So they do what Dave Ramsey says, they get their 3 jobs and they live on ramen noodles and they cut up their credit cards, never have any fun. And so, okay, so I saved up this money to pay off this credit card. Great. They write the check and then that money is gone and it never does anything for them.
Wow.
Okay. When you leverage something that continues to appreciate, even after you've collateralized that money, then sure, you've paid off this credit card debt. Visa has your money. Great. Congratulations, Visa. But you've still got it also because it's still growing. You're still earning interest on it. Yes, you have to repay the insurance company the amount that you borrowed out, but even that principal continues to grow. So unlike that first guy who cut off his compounding of interest by taking the money out of his savings account, his CD, whatever, to write that check to Visa. Now his account's drained. There's nothing there. When you're leveraging this properly, you're not left with nothing. You still have that equity, and it's still appreciating. And when people realize that they can use their money in multiple ways, that's what I'm referring to by becoming their own bank. They're using their own equity as collateral, not applying for a bank loan. They're expanding their businesses. They're eliminating their bad debt. And yet they're not starting over at zero every time they write a check to a creditor.
Now, in these life insurance policies, don't they have to be like established for a certain amount of time before they can be borrowed against?
No.
Okay.
Once your check clears, you can withdraw money out of it.
Oh, wow.
Yeah. Now, each person's situation is different. That timing applies. But I don't want to give the impression that, we're creating money out of thin air.
Oh, right.
It doesn't happen.
And that's why I was asking that question, was because
Yeah.
I just wanted to make sure that we
Generally,
can't just take out a
3 to
life
5
insurance
business
policy
days.
and borrow against it immediately. Right.
Generally 3 to 5 business days, Jeff. And as soon as the check clears, and then usually a direct deposit, they'll send it into your account. You have contractual control over that money. The insurance company doesn't say, okay, well, what are you going to use it for? They don't ask for collateral. They already have it. It's right there.
Right.
So there is the application has one question on it. How much do you want? That's it.
So how long does it typically take in order for the user to be able to use the funds?
Well, those 3 to 5 days, generally, they will be able to take money out. But of course, they've just put money in. But the difference is, once the money passes through this account, now they can take the money out, but they're still building that equity. They're still appreciating. So there's a difference between, okay, say you save up $10,000 to pay off a Visa bill. Okay, you can write out that check to Visa, the money's gone. You can deposit that money into your account, and you can take out $9,000 of it, pay off Visa. What happens to your account? You're still earning interest on the 10, not just on the 1,000 that you left alone. Okay, that's where you're growing exponentially. And I'm getting, kind of deep into the technical here. I don't want to risk, losing the listener's attention span.
No, I mean, I've heard this before from,
Mhm.
Obviously a lot of wealthy people,
Mhm.
and heard about this through social media, of people borrowing against life insurance and whatnot. I've never obviously done it, and was always kind of skeptical on it because it does seem like a scam almost, quite frankly. Obviously, I know it's not. I just don't know the ins and outs of it.
Jeff, that was my reaction too when I first heard about it. My "this sounds too good to be true" alarm went off. You're right. Wealthy people do use it. Walt Disney used it to build Disneyland. Ray Kroc of McDonald's borrowed money out of his policy to use it. This goes back to, even to John D. Rockefeller, world's first billionaire. The reason why this passed my "this sounds too good to be true" test is when you understand that, okay, I am borrowing money from the insurance company, not my own money. That's something that Dave Ramsey mistakenly says when he goes on his rants. You're borrowing your own money. No, you're not. You're borrowing the insurance company's money. It comes out of their general fund, not out of your cash value. That's why the cash value still grows. Okay.
Gotcha.
100% logical. You're going to earn the money on that, the interest on that money because the money's still there. It didn't move. Okay. So now I've got a low, simple interest rate that I owe back to the insurance company rather than a big amortized interest rate that I owe to a bank, a traditional bank. Everyone involved here makes money. The insurance company makes money because now they have the safest investment of all, because we're all going to die someday.
Right.
And what happens when you collateralize that money that's in your cash value? If you've got a $500,000 life insurance policy and you borrow $50,000 out of it and you die the next day, what happens? Your beneficiary gets $450,000. They subtract the amount of indebtedness to them from the death benefit.
Right.
So there is no chance of your defaulting on this loan. They don't give you a repayment schedule. They don't care if you repay the loan or not, because what's going to happen, okay, that same scenario, I borrowed $50,000 on it, and over the years, let's say I don't make any payments back into it. Interest is going to accrue, and let's say that by the time you die, now that they would charge you $30,000 in interest. What happens? Beneficiary gets $420,000. There is no way that the insurance company loses on this. It is the safest investment they can possibly make.
Awesome.
Whether you pay back that loan with interest or not. Now, if you want to continue to leverage, to grow and leverage that cash value, yes, of course, you will repay that loan. And as you do so, then you can lather, rinse, repeat. Just do that over and over again. I paid off one debt. Now let's do the next. Now the next. Now let's invest in my business. Now let's invest in whatever, a rental property. And you're literally leveraging that as if it's your own bank.
Oh, that's definitely good information. Whether you're a millennial or not, in this economy, I feel like you could use Scott. What's the best website for them to reach you at? Because I got 3 here, I believe.
Okay, the nevertoomuchmoney.com is a general website. You will be able, there's a button to click there to email me, Scott@nevertoomuchmoney.com. The one, I forget what the other was, but the one, Better Talk to Scott, that's to schedule a meeting with me, a video conference. So you can do that directly. That website there, SLF, as in student loan forgiveness, .debtbreakdown.com. That is what you would use to get student loan forgiveness. 90% of people qualify.
Wow.
So you can go there. It's one pretty brief form to fill out, and my people will give you a call, verify that eligibility. It's about a 90-day process. It isn't something that happens overnight.
Okay.
But 90% of people qualify.
Is
to
there
have
a charge for it, or?
There is, but it's way less than their student loan.
Okay.
It's based on the amount that's forgiven. So it's a small percentage of what they are on the hook for today.
Perfect. Well, Scott, we definitely hope that that you've opened some minds to life insurance and how it can benefit you. I know that you are more geared towards the millennials, but like I said, I feel like today's economy, there might be more millennials that need it.
That's certainly true. And I would like to add one caution. I was in the insurance industry for over 30 years and never heard of this.
Wow.
Fully licensed, Never heard of it. This is not something where you can just say, oh, okay, well, I'll go down the street to my auto insurance guy and I'll say, hey, give me that thing that where even though I borrow against it, it still earns interest. He'll look at you like you're from Mars or something.
I bet.
Okay. The infinite banking concept, which is what this is called, there are a few people out there that specialize in it, and I really recommend, whether it's me or someone else, you definitely want someone who specializes in infinite banking.
Infinite banking. It's a good keyword to know is infinite banking.
Yes, definitely.
All right, Scott. Well, we might need to get you back on here a little later
I'd be glad to.
further discuss this.
Yeah.
I feel like it's definitely something that, like I said, I've heard about it. I've just never seen it like put in practice because it always has seemed like too good to be true kind of deal.
Yeah. Yeah.
And so to have someone like yourself, a professional in that industry, is definitely helpful. So definitely appreciate you. Jared, you got anything? Can't hear you. Nope. Jared's mic is done.
Uh-oh.
There it is. Kind of. Nope. You're muffled.
Nope. Okay.
All right. Well, Jared has nothing. He's silent.
And I'm sure it was going to be brilliant.
Well, Scott, he will get you this clip. We're going to put all your links hyperlinked into the bio so that people can just click and don't have to worry about typing what was on the screen or remembering what was on the screen. We're going to hyperlink all the links down below for you. So that way anybody can get in touch with you, Scott. So with that said, I hope you have a wonderful day, Scott. Thank you for the information, and we will definitely be having you back on for sure because I would like to deeper dive into some of this as well.
Well, thank you very much, Jeff, Jared. Always a pleasure to visit with you and with your audience. I greatly appreciate it.
Absolutely, Scott. Thank you.
It was great. All right.
Oh, there he is.
You're good.
Welcome to the Business After Hours, where the ties loosen, the suit relax, and we talk business without the boardroom. Grab your favorite drink, kick back, and let's dive into the world of business